Hello, and welcome to 10-Minute Mastery. This session will cover closing entries for a merchandising business. We'll cover two methods and examples. By the end of this 10-Minute Mastery, you will be able to journalize closing entries for a merchandising business. This session will present two methods of closing entries. Method 1 uses 4 closing entries using the income summary account. This is known as a temporary account. Method 2, we will use 2 closing entries instead of 4. Method 2 is not using the income summary account. For closing entries for both service and merchandising businesses are very similar. There are 4 closing entries for this first method. Closing entries using the 4-entry method. The following balances were taken from the ledger of Arctic Company. When we journalize these closing entries, this is what it looks like. The first journal entry is to debit temporary accounts which have a credit balance to the income summary account. You can see here on your screen, closing entry number 1, we have the date December 31, debit $5,330,000 to the sales account, credit same amount to the income summary account. And that's the first journal entry using the 4-entry method. The second journal entry is to credit temporary accounts which have a debit balance to the income summary account. When we journalize journal entry number 2, we use the same date, 31. The debit is to the income summary account in the amount of $3,677,000. And then we need to credit cost of merchandise sold, selling expenses, administrative expenses, and interest expenses. Then we're ready for the 4th out of 4 closing entries. Close income summary to capital. So the 3rd journal entry is a debit to income summary in the amount of $1,428,000. The credit in the same amount is to TPEAK capital account. And the 4th and final closing entry using the 4 journal entry method is to close the drawing account to capital. Here in the last journal entry that you see here, date is 31. The debit is $155,000 to the TPEAK capital account. The credit is in the same amount, and that's to the TPEAK drawing account. Let's move to the other method, the 2-entry method. There are 2 closing entries for this method, and with this method, we do not use an income summary account. The order to prepare the closing entries for the 2 journal entry method are to debit each revenue account for its balance, credit each expense account for its balance, and credit the owner's capital account for net income. We need to debit the owner's capital account for a net loss, and cost of merchandise sold is a temporary account and is closed like an expense account. The next journal entry is to debit the owner's capital account for the balance of the drawing account and credit the drawing account. This is what it looks like when we journalize using the 2-entry method of closing. The first journal entry, we date December 31, and we have a debit to sales in the amount of $5,330,000. We then need to credit cost of merchandise sold, selling expenses, administrative expenses, interest expense, and the TPEAK capital account. Where did that amount come from? That $1,653,000 comes from revenues minus expenses. So we're going to credit the owner's capital account for the net income. Again, that would be the revenues minus expenses. The second journal entry, we use the date 31. We are going to debit the capital account for $155,000. And in that same amount, we are going to make a credit entry to TPEAK drawing. Thank you for viewing. Feel free to leave a comment below. And don't forget to subscribe.